Welcome to my live market meeting, 27th January 2021. I am Sagar Nandi, retired information technology professional. I retired several years ago swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel and Twitter handle. You are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the systems I use in my real life trading, and I will use the same systems in the live analysis today. That was the last slide of the presentation. Let's continue with the live system. As usual, we're starting with global market study, starting with the Australian index AXJO. It is continuing to move sideways. It did break out of the watermark resistance, and I mentioned that if it pulls back and goes up again, that may give a trend following long setup if it reverses from the trend line support. There is a chance for that because the weekly also has a trend line support. Currently, there is no trade setup. AXJO is continuing in an uptrend. Let's look at the Japanese index topics now. Topics is also in an uptrend. It has trendline support in daily and weekly. Sorry, the weekly didn't change the symbol. Let me refresh it. In options, change all charts in the layout. Update again. Now weekly, daily, both are having topics. Daily has a trendline support and weekly is also in an uptrend. It is inside a channel too close to the upper boundary. Therefore, I am not going to take a new long position, but it is in an uptrend. Today's candle is also bullish. This week's candle is also bullish. Next, China index CSI 300. Can you see a familiar pattern? After displaying the bearish headwind in daily, it was followed by a second bearish headwind. The second bearish headwind came at the watermark resistance created by the first bearish headwind. Looking at that, one might try an intraday short trade right on this red candle. That is yesterday's candle. That was an intraday short trade. Though it fell for one day and then today's traffic candle color is bearish, there is no swing short trade setup, including no bearish headwind short setup. Why? Because though the bearish headwind signals appeared in the daily chart, if you applied the checklist conditions for the weekly chart, those were not met. That is why there was no bearish headwind short trade setup. As usual, whenever the bearish headwinds come, I am cautious about long positions and I might take an intraday short trade yesterday, but I would not try a swing short trade. It is still in an uptrend, but at the right edge it is looking weak. I am not going to take any new long trade in CSI 300. Next, Footsie index, UK market. This is certainly weaker than the other markets we saw so far. Again, after the weekly bearish headwind, price could not go up. it fell for 3 weeks. The current week's backdrop color is bearish. In the daily, price is rolling over. It is still in an uptrend. Therefore, we are not going to take any long or short trade in Footsie index. These global markets are still in an uptrend, though showing some weakness. And the strongest of the global markets used to be the India's Nifty 50 index. Have you seen how even the strongest ones, many of the global markets in fact, are displaying bearish headwinds either in weekly or daily or both? After Nifty 50 displayed the bearish headwind in the weekly chart, which had an indecisive shape candle, next week's candle was also indecisive, and this week price is falling sharply with bearish backdrop color, bearish shape, and bear release signal. In the daily, after displaying the bearish headwind, it is falling for 4 days in a row. 4 days in a row with bearish shape candle. If you look back all the way, stretching to the leftmost corner of the daily chart, that has not happened. That has not happened for all these months. That Nifty 50 fell 4 days in a row with a bearish shape candle. And how nicely the bearish headwind alerted about that possibility. In the last webinar, I explained how, looking at the possible reversal signal, you could take very profitable intraday short trade in Nifty futures. There would not be any swing short opportunity at that time because of the trendline support. Today, price opened below the trendline support and continuing to drop further, closing near the low of the day. Therefore, today gave a breakout short trade setup. You could take the intraday trade using Q fine-tune chart. At the right edge, both in the weekly and daily, the strongest of the global markets, India's Nifty 50, is looking weak. I would not take any new long trade in the India market other than probably defensive stocks. Defensive stocks may move opposite to the overall market trend. Other than defensive stocks, I would not buy new stocks in India market. As I mentioned earlier, Indian market was very strong and it was reflecting the strength of the USA market, probably because many foreign investors invest in global markets, India being one of them. Now that it is rolling over, we have to see whether the USA market is also rolling over. It's not that USA market is following India market, it's the opposite, but India market opens and closes earlier, so sometimes you may see a drop in India market followed by a drop in the USA market. If you see the pressure signal, and I mentioned it earlier also, though price was going up, the high pressure days earlier for many months since October last year, early October last year, in fact since late September last year, any pressure signal that came was bearish pressure signal. And in recent days, 4 nearby days had bearish pressure. That is showing that though market was going up, especially at the right edge, it was weakening. 2 bearish pressure followed by another 2 bearish pressure, and now it has broken below the trend line support. India market is looking weak, but if you see longer term period, it is still in an uptrend. What does it mean? It means that just because an instrument is in an uptrend doesn't mean we should buy that. We shouldn't have bought when the bearish headwind came, followed by several bearish candles, and we would not have bought today also. Yes, it is in an uptrend, doesn't mean we should always buy. And if we followed the Q 360 degrees analysis, that would not give us any long setup anyway. Let's now look at the USA market. I was using Q Global on Metastock for the global markets. Let me use Q elite on trade station for the USA market, starting with the ETFs, SPY first. This is very strong, stronger than the strongest global market as of today. This week, the high of the week so far has made a new all-time high. Yesterday, high of the day made a new all-time high, though it pulled back inside the watermark resistance level here. As I mentioned, unless this trend line is broken, support trend line is broken, the uptrend will be intact. SPY is bullish, no bearish signal, though in the overnight market, futures are down. We have to see if the trend line support will get broken. We'll look at the future symbol also. Let's look at the ETFs as of yesterday's close. QQQ, even stronger than SPY. Yesterday was an indecisive shape candle. The day before that was also indecisive shape. Long lower tail doji-like candle at the top is a signal for caution. The day before that was also a doji candle. It is still in an uptrend, but we are seeing a series of dojis in the daily, and as of today, yesterday's close, the weekly also has a doji-like candle. Still in an uptrend. Dia had a bearish headwind earlier in the weekly chart that had indecisive shape candle. Next week was also indecisive shape, yellow color. This week again a doji shape so far, and the color has changed to bearish magenta. In the daily it was moving sideways, not able to go up with QQQ SPY. That is showing the relative weakness. The relative performance line is also showing that. Traffic light candle color has turned red. It is moving sideways, not bearish, just sideways. And IWM used to be the strongest market ETF for several weeks and months. Last couple of days, it is not the strongest, certainly not yesterday. The weekly is showing indecisive shape candles for 2 weeks, and the daily is moving sideways. It has a large number of doji candles in the daily chart. When large number of doji candles come in a overheated market, that is a signal for caution. Again, this is also in an uptrend. Though all the market ETFs are in an uptrend, I mentioned on Twitter that there are sometimes violent down moves in the intraday chart. I am not going to roll back, but I tweeted about that, and this is a look at the futures using 30 minutes. It is falling sharply. However, now it is overnight market, it is falling sharply doesn't mean it will stay down. We have seen that many times it fell sharply and recovered. One day it will not recover, but we don't know if that is today. Let's look at the futures on at a glance template. Futures are weaker than ETFs, isn't it? ES displayed a bearish headwind earlier. This week again has turned bearish color, bearish shape. Daily also displayed a bearish headwind, and price is near the trend line support. Multiple times it could not breach the trend line support. We'll see if this week is an exception. Until the trend line is broken, the uptrend will remain intact. But today in the overnight market, it is looking weak, but right at the trend line support. That is not a time to take a new short trade. Let's just look at NQ also. NQ is not as weak as ES. The weekly color is still bullish, though it is a doji candle. Daily is yellow, not magenta, and it is far from the trend line support. It is stronger than ES. However, stronger doesn't mean we are going to take new long positions. If we apply Q360-degree setup, we don't have any long trade in NQ or any of the market ETFs right now. If you are following Q guidelines or the way I approach trading, you would not wait for the market to drop or turn bearish to start to take short trades. As you know from my sharing on the website, I have started taking short trades from I think more than 1 week ago, 1 or 2 weeks ago, and I shared the at least some of the trades publicly. And I never want to talk about trades that I didn't share at the time of analysis without knowing the result. Let's go through some of those trades. And when I took those short trades or shared them, many people might be surprised because the consensus of all market experts was that market was bullish. And I also had the same view, except that I mentioned based on data that there were large number of bearish headwind signals in global market instruments, in USA market futures ETFs and individual USA stocks. That allowed me to look for shorting the top trades. Bearish headwinds come at the top, so I would look for shorting opportunities in stocks that were at price extreme high or just starting to topple over. I shared several of those trades. Let's review them and see that though the market is still bullish, only today in overnight market it's down a bit, how those short trades did. Alcoa was one that I shared sometime here as a short trade. It has dropped sharply after that. I have already booked profit in the trade. And most of these trades that I am sharing now, explaining now, the ones that I shared 1 or 2 weeks ago, maybe 1 week ago in the one of the YouTube live sessions, I took most of them using verticals. Why verticals? Because the market was still bullish, so I was reducing my risk by taking vertical trades, not simple puts and certainly not simple stock short positions. So Alcoa exited profitably, quite easily you may say. Next is XLF. I shared XLF based on the bearish headwind in the weekly, the watermark created by that bearish headwind and a false upside breakout at that point. I was starting to look for shorting ideas from this point. I shared the analysis on this day or maybe the next day after market open. I initiated a vertical put vertical bearish position at that time, and that has hit the profit target by yesterday, I think. So I usually place GTC order for vertical trades. That profit taking order was executed yesterday. So XLF also exited. Then several trades I explained, possible trades I took, probably all of them, and they have not hit the profit target or stop loss yet. Of course, if I traded with put verticals, then I wouldn't have to worry about stop loss. When I'm talking about stop loss, what I mean is that if someone traded with stock, was the stock hit? And this is LUV, Southwest Airlines. Since I shared the bearish idea based on the reversal from the trend line resistance in weekly and the reversal from the watermark resistance in daily, the stock has not been able to go up. Yesterday's candle shape and color both were bearish. In the overnight market, it is again down by more than minus 1.5%. So this bearish trade initiated earlier is also working out all right. Another idea I shared was in Wells Fargo WFC. I probably shared it based on this magenta candle or this magenta candle, I don't remember, somewhere here, and since then price has not gone up. You can see the weekly is slowly coming down, not rapidly but slowly. This week's candle shape is bearish. Yesterday's candle shape is very bearish. Yesterday's traffic light color is bearish. In the overnight market, it is down by another 2%. So this is also working out all right. What I mean all right, in another term, profitably. Next is Boeing. I shared it looking at the bearish backdrop color in weekly, and I shared it on this magenta bearish flow candle on the daily. That was a go with flow short setup, and it was also falling below both the yellow and white direction lines. Since then, price could not go up. Yesterday's candle color and shape both are bearish. In the overnight market, it is down by more than minus 3.3%. Relative performance is also tilting down. Again, a trade that is working out profitably. Next is Netflix. I explained why and how and when I took the trade. It was not a standard Q trade setup. I took an options trade on the day of earnings when price hugely gapped up and then continued to go up. It was at the weekly trendline resistance, also the watermark resistance in weekly, which was there in daily also somewhere here. I expected price to come back below the trendline resistance, and based on that I took a vertical trade either using short call or long put. And as I expected, you can see the weekly pulled back below the trendline resistance. Remember, I was looking to short it near the top, and I was expecting the price to come back at or below the trendline resistance, and that analysis has proven correct. It has pulled back. Yesterday's candle shape was indecisive. Today in overnight market, it is down again by more than minus 1.7%. Again, a trade. This is not a Q trade setup, but based on extreme bullishness and the existence of watermark and memory resistance in weekly, I took the trade and it is working out all right. The last bearish trade I shared on the forum was on TJX. If I look at the historical trendline resistances, I shared the idea on this day when it broke below the trendline resistance. It was starting to go down. So you could say it was a breakout short setup as well as a go with flow short setup, if you assume that this was starting to calm down. There was no support nearby. I initiated a short trade right on that day using fine-tuned chart, and the put vertical that I took hit 50% of max profit yesterday. Now in this case, I saw that in a put vertical I had a long put leg and short put leg. Yesterday I saw that price came below even the short put leg. So I didn't exit full position. I'm holding partial position and I have set my profit target to 80% of max profit. That is not usual. The usual approach for my vertical trading is book profit at 50% of max profit. However, in this case, yesterday price closed below even the short leg for long put vertical. Short leg of long put vertical, and it has about 10 days to expiry. So I am comfortable that I will close the trade with a good profit, but instead of booking full profit at 50% of max profit, I changed my order on at least partial position to 80% of max profit. Now if I see it is starting to go up, of course I will book profit, but if it goes down, my GTC order on 80% of max profit will be hit. In the overnight market, it is down by minus 1.5%. Another reason I am holding on to the trade, at least partial position, is looking at the relative performance sharply tilting down, and there was a bounce from the yellow direction line one day earlier. Traffic light color was still bearish, and even that day closed below my short leg. My short leg is actually at 66, long leg was 67.5. So 2 days ago also it closed below my short leg. Yesterday closed further below my short leg. Yesterday it closed below the yellow direction line. Y direction line is far away, trend line support is far away. And I checked the industry was also weak yesterday, so I didn't want to close full position in this case. Some of you or many of you may also trade high growth stocks, and I shared a bearish idea on CrowdStrike. Again, I am only talking about trades that I discussed before knowing the result. I talked about the bearish trade when it was breaking below the trend line support one of these days. Don't remember here or here which of these days. And I took a put vertical, either put vertical long or short call vertical at that time. I was trading with verticals because market was still bullish. If you see the weekly is very bearish now in color and shape. Daily displayed a bearish headwind, and since then it is steadily falling down. Yesterday closed near the low of the day. Relative performance is tilting down. You may not be able to see it on your monitor. It's tilting down. Next yellow direction support is some distance away. So I have a short position in it. I am holding on to it. In the overnight market, it is down by another 4%. I have placed the GTC order at 50% of max profit. I think that will be hit today. It is down in the overnight market by $8, more than $8, $8.40, about that. And I know it will hit my 50% of max profit today. And I'm going to exit the trade. I'm not going to change the GTC order in this case, because though it may hit 50% of max profit, it may not come below. I have to see, it may not come below the short leg. If it comes below the short leg, I have to see whether I exit full position, hold on to partial position. However, CrowdStrike is a high growth stock, well-known stock, so I may not wait to book profit in this trade. That was CrowdStrike. If you followed my Twitter sharing or forum sharing, you know all recent trade ideas were on the bearish side, except I think yesterday I shared an idea that was on Pfizer. That was not a Q trade setup but a pullback signal. Pullback is a signal, it is not a Q trade setup. How is the signal? If a stock is going in an uptrend, and here the uptrend is clearer in the weekly chart, and then it pulls back in weekly, daily both, but stays above white direction line and recovers above the yellow direction line, that's a pullback setup. I shouldn't say setup, it's a signal. Doesn't have an associated unambiguous checklist. The difference between Q setup and Q signal is Q setups have unambiguous checklists. So whether you are looking at it, I am looking at it, or a class 10 student is looking at it, 95% of the time we'll come to the same conclusion and we'll be able to confidently take the trade, be it in terms of fundamental analysis, industry analysis, or technical analysis. We simply apply the checklist. Those are for trade setups, and then there are some trade signals. Those are not Q trade setups, but some other traders may take them. Pullback is one of them. Why I shared Pfizer as a possible buying idea is because it's in defensive sector. Well-known pharmaceuticals biotech company, large biotech, not a small biotech. It pulled back and came to a support. Weekly is near the trend line support. I would be happier if price hit the weekly trend line support and reversed from there, but it didn't come down so much. One could consider buying Pfizer for longer term holding. I mentioned on my tweet for this webinar that I will also explain some of the longer term investment ideas. In Q technique, for buying longer term, one may look for what is called blue chip stocks, and then look for price to come down to price extreme or pendulum low. It may not happen every day. We have to wait patiently, and when it comes to pendulum or price extreme low, which is shown by magenta red or dark red color on this price extreme chart. From that point onward, one may look for a buying opportunity. That is a way to buy fundamentally strong stocks when they are down and then hold them for longer period. If you followed that in Pfizer, then the last entry point would have been around 20, somewhere between 26 to 30, let's say 26 to 30, and now the price is 37. You could apply that technique to enter a long trade. So for very long term investing, Pfizer is not the opportunity today. It's a pullback setup, which is also a very reliable setup. Many HSI traders, Dr. Jeffrey is a master of that. I always watch his videos and try to copy things from his ideas. And in fact, the pullback signal I added to Finder after following Dr. Jeffrey's videos over many months, many years. This pullback signal was not there earlier. And sometimes I'm getting good trading ideas from there. I am not as good as Dr. Jeffrey for taking the pullback trades because I don't have an unambiguous checklist in Q systems for that. But I'm getting better trying to see the charts, and these are to be strong fundamental stocks. Pfizer is one of them. Let's check that out, why I suggested Pfizer as a buying candidate, even though I was not sharing any long ideas for several weeks now. Pfizer, it is calculating the fundamentals. Let's check the industry strength from QH. When I shared the idea, then the industry was very strong. It weakened little bit yesterday, but when I shared, it was strong in terms of relative industry strength, and it has excellent valuation. 4.18% dividend yield. It's a profit-making company. Earnings per share is positive. Earnings growth is negative, but not very large number. Anyway, I bought it as an undervalued stock and a pullback signal. If I check up the Q finder, you can see it gave a pullback signal also. Green cell means 1 day ago, not yesterday, but the day before, and the candle color was also bullish flow at that time. That is how I identified Pfizer from Q finder. Now, I mentioned that Pfizer could be a buying opportunity, defensive stock, but it is not a stock that came to price extreme low. What is a stock that came to price extreme low recently? That is a place to buy for longer term holding, that is AT&T. Now, if I check AT&T's fundamentals, when we are buying at price extreme high blue chip stocks, we expect them to be undervalued. And AT&T is certainly undervalued. Not high growth stock, that is fine. We are not expecting to buy high growth stocks at price extreme low. It is making money and it has 6.99, almost 7% dividend yield. You can see from the percentage price change over last 10 days, 5 days, 2 days, 1 day, steadily going up. Okay, earnings is today. Not sure before market hours or after market hours. In any case, for longer term holding, we are going to have to hold it across earnings. Because it has nice dividend yield, before earnings, if I wanted to buy AT&T, I would probably short the put. Because anyway, I'm going to buy the stock. Why pay the full price? I would rather short the put or take a synthetic position, short the put and buy the call. In the worst case, I will end up holding the stock that is paying 6.99% dividend. Now, how could I keep an eye on stocks like that? If I see the price extreme chart, you can see that it came to price extreme low here and here and here. From then, you could start to think of buying the stock. That is the Q technique of buying and holding strong fundamental stocks at low prices. How? Find out strong fundamental stocks. You may find that out from Q Vital or Q Edge. Undervalued stocks, maybe with good dividend yield, may or may not have good dividend yield. However, undervalued stocks that comes to Q price extreme low and then start for a buy signal. Now, if you look at AT&T signal today from Q Finder, it gave a breakout setup. Yesterday, that means one day earlier, not yesterday, even breakout setup yesterday, and one day earlier it gave a bullish flow and a trend line touch and a trend line reversals. The green signals are one day earlier signals. Yesterday had a breakout. So it was at price extreme low and it was starting to go up. It gave a breakout signal yesterday, breakout from this trend line resistance. So you could buy yesterday. One day earlier, it gave a bullish flow and trend line touch. Could you buy on that day? At the close of the day, I wouldn't buy because price was just below trend line resistance. Instead, if I notice the stock, yesterday, right when it was breaking about trend line resistance, I would buy using Q fine tune chart. Again, the Pfizer idea, buying idea, and AT&T buying idea, these are not shorter term buying ideas. For shorter term trading, I'm not sharing any buying ideas now because the market is very toppy, and you can see all my other trading ideas are on the bearish side and they're working very well. However, Pfizer and AT&T has decent dividend yields. This could be longer term holding opportunities. Now, yesterday you could buy as a breakout setup. But you know, Q techniques have very powerful reversal signals like box and trendline reversal, that is bounce on touch. So we could know that this is a fundamentally strong stock at price extreme low, and that was also at trendline support. So when it came to the trendline support 2 days ago, we could buy right at the lowest point. How? Let's switch to the intraday fine tune chart. And let me change the interval to 30-minute interval. You could also draw the daily trend line location, the price level at this point. When price came to this level, the trend line support on this 30-minute chart, which is exactly the trend line support on daily chart, you already decided to buy AT&T based on its fundamental valuation, based on dividend yield, and you wanted to hold it long term. You knew the trend line support was there, so you'd wait for price to come to the trend line and bounce up, and you would be notified on Q sonar. If you use that, you would be knowing from Q finder. If you use that, you would buy right at the close of this candle. However, here I am using 30-minute bar. In real life trading, I would use, or you would probably use, 10-minute bar. So our entry price would be somewhere here, and from there price went up nicely. Anyway, it's not a short-term investment idea. I am avoiding sharing short-term long ideas right now because the market is heavy. For shorter term, I'm only sharing bearish ideas, but I thought AT&T and Pfizer could be longer term holdings as well because they are undervalued and have excellent dividend yield. Now let's look at few more stocks. Let's look at Texas Instrument, TXN. And I'm discussing this stock once again to show how the bearish headwinds help us not to buy at the top. It displayed a series of bearish headwinds in weekly as well as daily. Was there any Q swing short trade idea? No, because the trend line support was still there. Today it breaks below the trend line support, then certainly any long position holder may exit or hedge the position. Or you may look for a shorting opportunity. There is no swing short setup. If it breaks below trend line support, you may keep an eye on it and look for a shorting opportunity using intraday chart, not a swing trade, because there is no Q trade setup as of now. In this way, whenever the bearish headwinds come, you may be cautious. Now I want to mention one more thing, how to find a list of stocks that are at price extreme low and starting to go up, and how to find out that they are fundamentally strong. There are two aspects, at price extreme low and then fundamental strength. You may start from either direction. If you want to start from fundamentals, let's do that. We go to a list of, let's say, go to the list of liquid stocks, carry out a fundamental analysis of all those stocks using Kpti. Let it retrieve the data and calculate the scorecard. While it is doing that, let me explain the other way. If you go to Q Global, we have a series of explorers or scans. If you scroll down, one of the scans is at price extreme low and reversing. Or you may just look for stocks at price extreme low and look at the stocks that are fundamentally strong, and then keep an eye on them to see if they are giving a buy setup. So you could run any of these two scans, Q price extreme low and reversing, or Q at price extreme low. That would be a technical starting point to buy fundamentally strong stocks. If you are using Q Elite on TradeStation, then it has number of scans. One of them is Q at price extreme low and reversing, and another is Q at price extreme low. So you have the same scans in Q Elite TradeStation as well as Q Global Metastock. I tend to use these two scans for my longer term investment ideas. Find stocks that are low price point starting to go up. Next step would be to check their fundamentals. Now, the other approach, starting with fundamentals, is this. It already calculated the scorecard of these 2586 stocks. Let's go to the scorecard and find out the stocks that are undervalued. I'm not looking for high growth stocks, so I'm using this smart filter now. I'm not using the star filters, but I'm using the valuation smart filter, undervalued. That gives all the undervalued stocks, and let me also choose the ones where secondary valuation is also undervalued. So I am ending up with these stocks. Now I want to see if any of them is giving a buy setup. How to do that? I may scroll down. Okay, let's see the stocks that went up yesterday. Went up by, say, at least 1%, and then I may look up their technical signals using this lookup from Finder. Let me click that. That will show me those stocks from those fundamentally strong stocks that went up yesterday by at least 1%, whether they had any Q signal. Some of them are trade setups like breakout, trend following, go with flow, bounce, zero count, 2, bullish headwind, and box 3. And then we have other signals like pullback, touch, etc. So now I could look for breakout buying opportunities. These are the stocks. Let's look at some of them. Position my cursor on the chart application. and open the charts from Q Finder. What are these stocks? These stocks are okay, sorry. I should have done one more thing because I'm looking for fundamentally strong stocks. When I found the stocks in Finder, these are all fundamentally strong stocks, went up yesterday, gave some kind of bullish signal. But now specifically, I'm looking for stocks at price extreme low. And I started with fundamentals first. I would use this paintbrush to look at stocks that are at price extreme low. You can see there are many stocks at price extreme high or middle, but this technique I am right now explaining is for longer term investing. That's the way I use strong fundamental stocks, but wait for it to come to price extreme low. So I would apply that filter and only one stock came up. So what did I do again? I have a list of liquid stocks in the USA market. I carried out a fundamental analysis. With one click, I found the undervalued stocks. I looked at the stocks that went up by at least 1% yesterday, and then I looked up those stocks on Q Finder to see if they gave any kind of bullish signal. Many of them gave bullish signals yesterday, but only one of them, Banco Macro SA, BMA is the ticker symbol, looks like ADR. Only one of those stocks happen to be at price extreme low. So let's look at these stocks. BMA, let's look at it using weekly daily. It has a series of bearish or memory resistances. It has a bullish headwind yesterday, but number of resistances, if it could break out of those resistances, then it could give a buy setup. Fundamentally strong. It seems that this watermark support is holding, but we would have to wait for this weekly trendline resistance and this daily trendline resistance to be broken. That is how for longer term investment we can create a list of stocks to watch for and put an alert when it goes above this trendline resistance. Let's say this price level. What is this price level? 17.2. We could put an alert on icon or any other application you use for alert. If it goes up, it could be a longer term buying idea. That is the approach where you start from fundamentals first. Instead of that, you could also start from Q Finder. Here I reset Q Finder to see all the stocks that gave some kind of bullish signal yesterday. And now I am going to use this paintbrush red filter to see which ones gave kind of bullish signal, at least one at price extreme low. And these are the stocks. Banco Macro, I already looked at it, so let me look at the others. One is ESPR, Esperion Therapeutics. This is creating a nice long base for last 3 days, starting to go up. Yesterday it broke out of the trendline resistance. Now in this case I started from Finder. I didn't look at the fundamental yet, so I'll have to do that. Let me keep ESPR, move on to the next stock. IVR, Invesco Mortgage CPT. This also created a very long base in the daily chart and now starting to go up with bullish pressure. We have to look at its fundamentals as well. Next is Nikola. Okay, earlier we all know the story of Nikola. Promising technology but no product in the market yet. It shoot up earlier, pulled back, but for several months now creating a base. Yesterday just closed at the trendline resistance. Went up with bullish pressure, bullish flow. If it can break out of the resistance, it may be a buying opportunity. But of course, we know Nikola, its fundamentals would not be strong. It's a new company, kind of startup, no product in the market yet. If you have faith in its technology, then you could take a position in the stock. Interestingly, if you thought about buying Nikola, you could buy at the pendulum low. In fact, at this point, it was at pendulum low shown by the band indicator. When the bullish headwind came at pendulum low, you could buy at that point, or you could buy at the first bullish flow following the bullish headwind, which would be at this point. It was still at price extreme low, and now it is giving a third buying opportunity. If it goes up today, that will be a breakout. So first bullish headwind signal, then bullish flow, then breakout. That is how you have multiple opportunities of buying. All of them are more or less low risk. The bullish headwind was of course very low risk. The bullish flow was also low risk. Breakout trades inherently are more risky, as is in this case, but still not very high risk if you are thinking of holding it for long term. But again, Nicola's fundamentals should not be strong, so I'm going to close it. I don't suggest, at least I'm not going to buy Nicola, not with full position sizing for longer term holding. The confidence with which I could buy AT&T or Pfizer, I would not have that confidence on Nikola right now because they are not proven yet. Next is Kpti, again a biotech, I think. Karyopharm Therapeutics, again creating a nice base. 2 days ago had a bullish flow, bullish shape candle that held the trend line support very well. We have to check its fundamentals. If fundamentals are good, this may be a buying opportunity. Of course, if it's a low price biotech, its fundamentals may not be good, but we'll look it up. Next stock, Scorpio Tankers, STNG. Again at price extreme low, that is what we are looking for. Creating a nice base, has trend line support. If it goes up from here, it may give a low risk longer term holding opportunity, but we have to check its fundamentals again. ICPT, again a biotech. Let me close the biotechs. Biotechs may suddenly go up or down. Okay, so we are back to the first stock, ESPR. It's also therapeutics, maybe a biotech. Let me close this also. IVR, is it a fund? Let's check it out. IVR, if it is a fund, its fundamentals as a stock, we may not buy it. It may be a fund. Mortgage rates. It has very nice dividend. So that is one reason to buy it. 7.6% dividend, but valuation is not good. Earnings growth is also poor, has a short squeeze potential. Who doesn't wish it to be like GameStop? But it is not going to be like GameStop. It's a raid, but nobody knows nowadays, isn't it? In any case, only based on dividend one could buy it. I wouldn't take a trade only based on dividend for longer term holding unless I see the valuation is undervalued. So personally, I'll skip it. Let's look at the next stock. Biotech, I think. But let's look at it. It's creating a nice base. Kpti. Though I'm looking at it personally, I'm not going to buy a small biotech for longer term holding with full sizing. I may buy it. I do sometimes buy low price biotechs less than my usual full size for longer term holding. And I will share one stock like that I bought recently. Those may go up, may not go up. That's why I don't buy with my regular full sizing. I shared this stock earlier with one of my friends, Q traders. I was talking with him. If I remember the stock, I'll show you. But this one, Kpti, valuation is not good. Earnings growth is steady for the yearly periods. Revenue growth is interesting. Very nice revenue growth for 3 quarters, 3 years. There's a short squeeze potential. So it may not be too bad for a biotech, low price biotech. How much was the price? $15. So for a low price biotech, it may not be too bad in terms of fundamentals, has revenue growth, though the company doesn't make money. So if I be strict, let's keep this also for longer term holding. left with STNG, Scorpio Tankers. Let's check that out. .k. Oil and gas storage and transportation industry has a 3.2% dividend yield. This company makes money. Earnings per share is positive. So let's check the valuation. If it is undervalued, this may be one candidate for longer term holding. While it is doing that, let me go to Q Edge and look at the, I'll come back to it, it's taking a while. When I'm running the webinars, it takes a while to retrieve the data from Reuters, more than usual time. So no problem, I'll come back to it. Let's look at the market through Q Edge. We saw market ETFs are strong, market futures are strong, the overnight market looks weak. The trendline supports are still there. Let's look at the very useful 1 day to 1 month picture. Drill down to strongest fundamental stocks, etc. I think my sound was mute for a while, sorry about that. You could change the country here to look at different major markets. Usually in these webinars I use the USA market. I'm refreshing the data for USA market. Let's look at the very useful 1 day to 1 month advanced decline. We can now see it is gradually weakening from 1 month to 1 day for sectors, industries, stocks. It is weakening, but the market ETFs were still having support. Now, if we see yesterday, 4 sectors were up, 7 were down. Which ones were up? Communication services, consumer staples, real estate. Consumer discretionary, we can say it was unchanged. So 3 were effectively up, communication services, consumer staples, real estate, all were defensive areas. And now you may see why I was suggesting some buying ideas, but those were only in defensive areas like Pfizer or AT&T. Defensive sectors only being up shows that yesterday was weak. And if we looked at Q Finder, let's look at the weekly picture as of yesterday's close. As of Tuesday's close, all signals are bearish, more than bullish. Reversal signals are very bearish, continuation signals are balanced, strength signals are balanced, but large number of reversal signals, a very large number of bearish headwinds, and also reversal candles. I showed that there were many bearish headwinds in the weekly chart for several weeks. That was a reason I was willing to take some short trades, though the market was bullish, and I showed those bearish trades. All Q360-degree trades are working out very well. Overall, the weekly picture as of yesterday is bearish, not bullish. And if I see yesterday's picture, it is even more bearish. All signals bearish. Trend continuation signals bearish 73%, reversal signals 76% bearish, strength signals are mixed. we can see large number of breakout as well as bearish flow, go with flow, trend following short setups, and some of the trades, bearish trades I shared recently, they were also breakout trades with bearish flow. So the finder picture is bearish. Let's go back to Kpti. I was waiting for the fundamental scorecard to come up for STNG, Scorpio Tankers. Excellent valuation, very nice earnings growth also for 3 quarters, a short squeeze potential, revenue growth for 3 quarters and 3 years. So we found one possible longer term holding candidate which pays a dividend, not great, but 3.2%. Let's look at its chart again. Let me use Q Elite not to make it unhappy. STNG. It is looking like in a good place to buy because it has trend line support in daily as well as weekly. If it goes up from here, that may give a buying opportunity. Of course, if the market is down, it may also come down. That's why these are supposed to be for longer term. Strong fundamental stock at a lower price extreme low. It has good support. If it goes up, great. If you are going to buy the stock anyway, you might also consider shorting the put. And if you are considering shorting the put, if price goes up today, you might short the put at the trend line support. Usually the trend line supports hold very well. By shorting the put, you would reduce your risk even further. And because it is at price extreme low, the options may be expensive if it has liquid options. If it doesn't have liquid options, the only way to buy it would be using stocks. Anyway, I wanted to explain this technique for longer term buying ideas. I use it for finding strong fundamental stocks as price extreme low that is starting to go up, and if options are liquid, I tend to buy with short the put or short put, long call, synthetic position. Last one thing I wanted to share, that is the total view weekly daily. As of yesterday, there is no distribution day, so it is not showing any bearish signal. Now I showed it earlier, the aggregate, this aggregate total view market breadth, the percentage of stocks above 50 MA, that is rolling over. That is rolling over for total view as well as rolling over for major market indices. That is a sign of weakness I shared earlier, and that became weaker in recent weeks or days. Here on the left hand side, we are looking at total view weekly, total view daily on the right hand side. No distribution count, but the sign of weakness is there in terms of percentage of stocks above 50 MA rolling over. Now if I go to Q Edge, Dr. Jeffrey asked for it and I released it in a hurry as a beta release. I like to try to release new features as soon as I can. After some trial and error, I finalized this release where I am, or you are able to look at the bucket analysis. In the first beta release, I tried to put today as well as yesterday's data. That was superfluous because it is an aggregate picture. We don't need, or we will not decide trades based on how it is changing between yesterday to today. Just today's picture, that is 1 day picture, and during market hours it will be real-time picture, is enough. So this is the final version and it is available for download from your personalized download page. What is this bucket analysis? You may know it already. For those who are not aware, let me explain. In QH, we have a list of stocks. For USA market, we use the S&P 1500 stocks. Now those stocks have different prices, different volatility. If I wanted to know whether in aggregate the stocks are extended to the upside or downside, or are they somewhere in the middle, how to know that? For every stock, statistically there is a normal range. What is normal range? The range within which it is expected to stay let's say 70% of the time using standard deviation. So that kind of normal range for each stock, the actual price range may vary, but every stock has a normal range. That range is first divided into 10 slots, 1 to 10, and if it is below normal range, then it is added into another bucket. If it is above the normal range, it is added to the highest bucket. So we have total 12 buckets. Every stock comes to one of these buckets, maybe above the normal high, below the normal row, or somewhere in between. So we assign a bucket number to each stock. We put all the stocks in the buckets and they give a count for each bucket. Then a percentage is calculated to show what percentage of stocks are in which bucket. Now you can see it is nicely, evenly, somewhat bullish distributed between the buckets. When many stocks as a percentage are above the first, highest, or second, maybe first or second through highest buckets, let's say 40% of stocks, this count hits 40% for the highest buckets, it has a tendency to reverse. Similarly, if 40% or so stocks are in the lowest two buckets, it has a tendency to reverse. That is the use of bucket percentage graph, bar chart, and the bucket percentage midline pie chart shows what percentage of stocks are below the middle bucket or above the middle bucket, and we can see it is slightly more bullish now. I tweeted the Indian picture just a while ago as an example to show the difference between USA and India market. See the Indian picture as of today's market close. Earlier Indian market was very strong, so you would expect that this bucket percentage was a green pie chart. Now it has become red, and you can see the stocks are many more now in the lower buckets. In fact, the more we go to the lower buckets, we get higher percentage of stocks. So if USA market starts to roll over, this is how it will look like in coming days or weeks. How it is looking like now? It is looking balanced now, slightly more bullish than bearish. Just how the India market was looking a while ago. These two charts will update in real time, and after market close, it will show one day status. If you keep an eye on a regular basis, you will get an idea about the balance between all the stocks, bulls and bears, in terms of their extension beyond or within the normal ranges in aggregate. So this is again another powerful market level tool. The input came from Dr. Jeffrey, and many of you may be using this concept earlier also on HGSI or other tools. But anyway, now we have it in Q Edge in real time, and not only for the USA market, for the other markets as well. That is also not showing bearishness. It is weaker than earlier. How we know? See, this is the picture as of yesterday's close, but if I go back to Twitter, see the earlier picture. This is for USA market. 73% were above the bucket midline. This was as of 26th January. 26th January, but near market open. So that is actually yesterday's market open. Yesterday near market open, in real time, 73% of stocks were above the bucket midline. Am I making any mistake? Today is 27th, so this is 26, 940. So yesterday near market close, market open, 73% of stocks were near bucket midline. And now after market close, that reduced to 58%. That is a big drop, and you can see the bar chart has also shifted to the left. This I am quite confident will be helpful, otherwise Dr. Jeffrey would not ask for it. This is available for download from your personal download page. So if you go to sagarnandi.com, now it is not a beta release. If I find any issue, I'll fix it, but currently it is available for as a general release, sagarnandi.com. You may go to your personal download page, log in using user ID password and download it. We are past the 1 hour point. Okay, before closing, let me look at the futures once more, just the ES futures. It is still at the memory support. If you see at the open, it is opening below memory support and continuing to go down. That will be quite bearish. But it is not easy for price to break down below these supports, multiple supports, not only in these futures, other futures, other ETFs also not easy. It has provided support for many days, many weeks. We'll have to see if it can break down today. That the India market suddenly weakened sharply is a concern, but we'll have to say that until these supports are broken, the uptrend is still intact. Let me end today's session today here. Thanks a lot for joining. I look forward to seeing you in our next session. That will be sometime during the weekend. Hopefully, I'll announce the date and time on Twitter, and you will come to know if you are subscribing to the YouTube channel. Thanks once again. Keep safe and trade profitably. Thank you.